When you are determining your residency, you may believe it's simple. Sometimes it's not always the case.
Definitely something that people don't think about. They think UAE, Dubai, no tax, great. Being taxed on worldwide income is something that is very much present.
It's not as straightforward as anywhere near as straightforward as a lot of people make out to be, I think, in the general public.
Can you give an example of what some of those ties are? So today's episode is all about UK tax residency, what it means, how it's determined, and why it matters for anyone holding or planning to buy UK property. Residency essentially drives how you are taxed, what you're liable for, and which planning opportunities are available to you. So to help unpack this, we're joined today by Abby from UK Landlord Tax. Abby, you lead the personal tax team and you advise clients on navigating residency and personal tax. Residency is often misunderstood, and I think initially it would be good if you could perhaps just explain the basics of what UK tax residency actually means for an investor.
When you are determining your residency, you may believe it's simple, where your home is, where your family is, where you're working, but sometimes it's not always the case. Each country has different criteria to determine whether you're a resident of that country. If you're in the UK for 183 days in a tax year, the UK tax year does run from the 6th of April to the following 5th of April. And if you're in the UK for more than 183 days of that tax year, you're automatically deemed a UK resident.
Yep.
So being deemed a UK resident, your overseas income is then subject to tax in the UK.
Yeah.
So that's where a lot of people do trip
Okay.
up. Yeah, definitely. If you've got income arising in another country, you may have to consider something called a double taxation treaty, which is what's held with the UK in another country. If a double taxation agreement, is in place with that country, that will stipulate who has that taxing rights for that income.
Yeah.
The double taxation agreement will stipulate who has taxing rights on that income first, and whether you can have a tax credit for the tax that you've paid in the other country in the UK. However, if you do have income arising in a country, such as the UAE, where there is not a double taxation agreement, then all the income that you are earning in that country, whether this is salary, whether it's rental income, whether it's dividends, interest on savings, it's all going to be subject to tax in the UK under the UK tax rates.
Yeah, I mean, I think that is definitely something that people don't think about. They think UAE, Dubai, no tax, great. Buy a property, and there's just no tax I even need to think about. But obviously, being taxed on worldwide income is something that is very much present. Do you get people coming to, I mean, how do people actually come to you initially? Is this something that's kind of an afterthought? They've already bought a property and now they're worried about it? Or do people often come to you from the beginning? This is what I'm thinking of doing. Mm-hmm. Can you help advise on my position? Yeah.
So we do have both scenarios, but a lot of the time with residency, it's always say we're preparing their personal self-assessment tax return. So we're asking the residency questions such as how many days have you spent in the UK? Have you worked here? Do you have family here? Do you have a home that's available to you for a certain amount of time and you've utilised that time within that property? So we ask a certain amount of questions, and by that time the tax year is already finished. So there's nothing you can do about it. So if you are then deemed a resident based on that, then there's nothing you can do for that tax year. And then the consequence of that is that income abroad is then taxable in the UK.
What are the key things to actually distinguish someone as a UK tax resident? Like, what are the most important things that are just definitely going to make you still a UK tax resident if you're looking to, say, move to the UAE?
So the main one is the number of days in the UK. So you've always got to be keeping a track of the number of days that you are spending in the UK, because, like I said previously, if you spend 183 days, then you're automatically resident under the first UK automatic test. So there's no other criteria that you need to meet. You've just spent too many days here. There are other UK tests, automatic UK tests to meet as well. There are also something called automatic overseas tests. If you don't meet either the UK or the automatic overseas test, then it goes to something called a sufficient ties test. And this is where people really do fall down on, because it's not kind of well known. When you say put it into Google, it's always the 183 days. If you're not here for 183 days, you're not a UK resident, but that's not always the case. just because the sufficient ties test comes down to two factors: the number of days spent in the UK and the number of ties that you have to the UK. So there's always 5 ties that you do need to consider when you're looking at the sufficient ties test. So we do have a lot of clients and come across it many times where they don't meet the automatic UK test, and they don't meet the automatic overseas test either. So we have to fall on the sufficient ties test to determine if they're non-resident or UK resident. But with this, depending on how many ties you have, so the more UK ties you have to the UK, the less days you can spend here in the UK.
Oh, interesting. Didn't know that.
Can you give an example of what some of those ties are?
Yeah, of course. So what a tie can be, so there's the 90-day tie, which is if you've been in the UK for 90 days in the previous 2 tax years. So then you would have a 90-day tie. You can have an accommodation tie, whereas if you have a property available to you for a continuous period of 91 days, and you spend a day in this property, or if it's family, so if it's parents, if it's siblings property, you have to spend 16 days, which is not a lot really if you're visiting for vacations and so forth.
Yeah.
Another tie is the work tie. So if you are working in the UK for more than 40 days, it means you can have a work tie. A family tie as well. So a family tie is if your partner or children under the age of 18 are in the UK as well. There are some conditions with that.
It's quite hard to leave the UK, isn't it?
I mean, it's so...
At the moment, you
yeah.
talk so much in the news about people leaving the UK, moving to the UAE. We have lots of clients who are doing that as well, but it's not as straightforward as anywhere near as straightforward as a lot of people make out to be, I think, in the general public. So those ties, is it like, are they, you need, you know, is it all 5 ties, or is it like any particular tie, one of those ties could tie you in as a UK resident?
Yeah, so as an example, let's say you have 3 ties, which is what I think is the most common that a lot of the people, say, who we deal with in our client base do have. So they have the work tie because even if they're to and from, say, the UAE and the UK, they're coming here for work, or because a lot of with home working now, they are working, because you only have to work for more than 3 hours that day for it to be classed as one day as
Who
the
set
tie.
all these rules?
Yeah, there is so
wow.
many. Yeah.
3 hours. Yeah, sorry, carry on.
3 hours a day. So you can't even just do a little bit. If you do work for more than 3 hours a day, then you do have that one day counting towards that 40 days for the work tie. So let's say you've got the work tie, you've got an accommodation tie, because let's say you visit your parents when you come back and you stay with them, and you spent more than 16 days within that property. So then you have the accommodation tie. And you were also resident in the UK for 90 days previously. Let's say you've only just left the UK, for example, or in the previous tax year, so you've got that 90-day tie. You then, because you've got 3 UK ties and you've been a UK tax resident for the previous tax year, for example, you can only spend 45 days in the UK. Yeah. So that's where a lot of people do kind of get confused with it, and that's where a lot of people do get caught out, really. And then that's when their overseas income is subject to UK tax.
So let's say they've now got these 3 ties. They are declared a UK resident because of these ties. Then you mentioned that they now can't spend more than 45 days in the UK.
Yeah.
Are they not now already deemed a UK resident because they've got these 3 ties, or have I missed that?
No. So the only way that they're deemed a UK resident is because they've got the 3 ties and they've spent the 45 days in the UK.
Fine, they've got the 3 ties, they've got the ties, and they spent more than 45 days.
Yeah, basically. Well, it's 46. So to not have, to not be a UK resident, the maximum you can spend is 45 days, because if you spend 46, then you're going to be a UK resident. Yeah.
And so the 183 days.
Yes.
Is that I've got no ties,
mm-hmm.
and can I spend up to 182 in the UK and still be not a UK resident?
If you've got no ties in,
If I've got no ties.
Yeah.
So selling all your properties.
Well, it's only if it's available to you for a continuous period of 91 days. So if you do have rental property in the UK, then, and you've got a tenant in there, that's not available for you to use. So that's where you kind of don't have the accommodation tie.
Yeah.
And especially if you don't obviously stay in that property as well. Whereas if it was vacant for half of the year and it was available to you and you did spend time in there, then because it's your property as well, you only need to spend the 1 day there. It's because family is the 16 days.
There is just no way that someone can understand this without speaking to a specialist
Definitely,
like yourself. You know, that you must speak to people all the time that would think that they are no longer a UK tax resident, and they most definitely are.
Yeah.
When that happens to someone, what can they do?
In terms of if it's already happened or going forward, how can they plan for it?
Yeah, how can they, I guess it's how can they plan for it? I think you kind of touched on it, which is if that's happened in the tax year, there is nothing you can do, right? It's really only about planning for the next tax year so that you can be set up correctly.
Yeah, that's it. So what we always say, if you are looking to leave the UK, you do need to get that tax advice, especially on residency, because it's not just, oh, I haven't spent 183 days in the UK, so I'm not going to be deemed a UK resident. If you're looking to leave the UK, it is very important to make yourself familiar with the statutory residency tests, consult with a tax advisor just so you are keeping track of those days in the UK, just so you aren't deemed a UK resident, because you're leaving the UK, you may be paying tax in the other country, you may not, but if you're going to the UAE, you're going for the favourable tax market over there. So you don't want to then be deemed a UK resident and then have to pay tax on all that income that you're earning in the UAE.
Yeah.
So it is very important to kind of consult with somebody just to make sure you're not spending too many days in the UK. You need to determine, do you have this tie, do you not? It is so important because it does catch a lot of people out, and then it's too late to kind of do anything about for the previous year.
Yeah.
Yes, you can do something going forward, but a lot of the time, especially with the UK tax rates, you don't want to be paying tax on that overseas income.
What's the most common one that people get caught on out of those residency tests that you mentioned? Is there a couple of really common ones that people are constantly getting caught on that haven't met?
Yeah. So I think when you've spent 183 days in the UK or more, they kind of understand, okay, I have spent a lot of time in the UK, so they do kind of understand. A lot of the time clients don't understand is, let's say they have spent, say, they have the 3 ties and they spent, say, 50 days in the UK. They believe, well, I've spent the majority of my time overseas. I've only spent 50 days in the UK, but because they didn't meet the UK automatic test or the overseas automatic test, it then falls down to the sufficient ties test, which then depends on how many ties and the days, and that's where it's prorated. The more ties you have, the less days you can spend in the UK, and that's what really catches people out the most. That's what I believe we have to deal with the most, and kind of give that unfortunate news to the client that it's all taxable in the UK.
In those circumstances where the most sort of common things that trip people up, what then is probably the most common things that people do in the next tax year? So in terms of, okay, these were my ties. I know it will depend on what their ties are, but what is maybe like one of the easiest things to drop to make sure that you are then let's say moving to, use Dubai as the example.
Yeah.
Moving to Dubai, got caught up in the previous tax year, but this is a fairly easy one to drop. What would that look like?
So the work tie, you obviously can cut down on how many days that you are working within the UK. So you don't have that work tie because you do need 40.
Yeah.
So you could cut that down if that's applicable to you, depending on obviously what sort of arrangements that you do have within your job role. But if that's one that you could quite easily drop. I mean, the 90-day tie, you've either got it or you don't, because it's the previous 2 tax years. You can't really change that.
Yeah.
The same with family tie, unless they kind of move out with you to Dubai, then you can't kind of drop that family
Can't
tie.
just drop your family.
Unless,
That's a tough one.
Unfortunately,
If I, like myself, full UK resident, I've only been on holidays and the odd, I do a month in Dubai every year. That's it. But let's say tomorrow, hypothetically, I want to move to Dubai full time.
Yeah.
I've obviously got loads of ties, right? I've got a house currently in the UK.
Family.
I've obviously been in the UK for more than 90 days the last 2 tax years. I've got loads of family here. The reality of me moving to the UAE next year and being a UAE taxpayer or resident, what is the reality of that?
Okay, yeah. So in terms of like obviously your family being here, that would be partner or children. So it doesn't, if you've got say your siblings or your parents here, it kind of, that doesn't impact the family tie.
Okay.
Oh, it's okay. So it's really just your partner or
children under the age
Okay,
of 18.
fine.
Yeah.
Okay.
And there is some certain rules with the children as well, depending on, let's say they're in boarding school and so forth as well. So there is a few more rules around that.
Of course.
Yeah, of course.
Yeah, it's
Just
a lot
because
to
there's
get
not
your head
enough
around,
rules as
isn't
it is.
Yeah.
But yeah, there is a few more rules around that. But generally, it's just partner and your children in terms of the family. But let's say you wanted to leave the UK tomorrow. You can claim something called split year treatment. So split year treatment is typically where your tax year, your UK tax year, is split into two. So you've got your tax year where you're UK resident, so would be up until the date that you permanently left the UK. And then you've got your non-resident part of the tax year. So it's split into two. So while you're in the UK, you've got your UK resident, the first part of the tax year. Your worldwide income is subject to tax in the UK, subject to double taxation agreements and so forth. From the date that you leave the UK, if you then start a job in the UAE, then depending on you, number one, that you stay out of the UK for a full tax year after the year that you've left. So you would then have to stay out of the UK, and when I mean stay out of the UK, I don't mean not come back for holidays and stuff, just be not deemed a UK resident for a full tax year after the year you leave.
Right.
So the year that we're currently in runs till the 5th of April. You would then need to stay out of the UK up until 5th of April 2027, as an example.
Yeah.
Just not be deemed a UK resident for that period to claim split year treatment. If you then decide to come back, say in 6 months' time, say next May, June, you wouldn't be able to claim that split year treatment. So any income that you earn in Dubai while you're kind of over there for the next 6 months is going to be subject to tax. So providing that you are out of the UK for a full tax year after the year that you've left, and you don't spend too many days in the UK after you've left up until the 5th of April, then all the income that you're earning in the UAE is not subject to tax in the UK.
So I wouldn't be tested in any other way apart from I've now left. I've been away for the full tax year. I get some allowance by the sounds of it to come back to go on holiday in the UK, for example.
Yeah.
But I'm now not being I'm not being tested for this residency.
Yeah, so you're always tested for your residency, but let's say you've come back for, say, 2 weeks. You're not going to be deemed a UK resident based on that basis. It's if you're spending a lot of times in the UK, you're back and forth. So obviously it does depend on whether you've been a UK resident before, which you in the previous years, which you would, depend on the number of ties. But a lot of the time you would meet the third automatic overseas test, which that's what you would go to first before going to the sufficient ties test. So you only go to the sufficient ties test if you don't meet the UK automatic or the overseas automatic. Whereas in your case, you would meet if you're just coming back for a holiday here and there, you would meet the third automatic overseas test, which would be you spend less than 91 days in the UK and you do not have a significant break from your overseas work.
Yeah.
And you do not work in the UK for more than 31 days while you're over here.
Right.
So providing you meet that, you would then just be classed as you are automatically overseas resident based on the third automatic overseas test.
Right.
So then you wouldn't kind of consider your UK ties. The only time you're considering your UK ties is when you do not meet the UK or the overseas automatic test.
Fine.
Understood. I think it just goes without saying for anyone watching this video, if you really want to understand your position, it's speaking with someone exactly like yourself, Abby. And, you said it's not like people need to come super prepared to that because you're going to obviously explain or actually give them more or less a questionnaire for them to then understand themselves where they sit.
Yeah.
Because I just think, through previous chats we've had in our chat today, I really struggled to see how anyone could understand this themselves without going through that test. And I think 9 times out of 10, probably people are going to trip up and find out that they are still a UK tax resident, which I think would be quite surprising to them.
Yes, definitely.
Because not to go into it loads now, but we spoke about, the likes of ChatGPT.
Yeah.
Is good in some ways, but on matters like this, I think it can sometimes confuse people more than help them.
Yes, definitely. We do have that a lot where clients do come to us and say, oh, well, ChatGPT did say that I was going to be classed as non-resident.
Yeah.
But it can only give you an answer depending on what you're putting into it.
Yeah.
So they don't know the different conditions that you have. They don't know if you've got a work tie. They don't know if you've got family here. So it can only give you an answer based on what you're putting into it. So because there's a lot of different conditions, a lot of different criteria to meet within residency, it's very hard to get an answer tailored to you and your circumstances from ChatGPT. And that's how a lot of our clients do tend to trip up on.
Yeah, because they're going to input some details or some data. I've been here less than 183 days, and it might straight away go, okay, you're not a UK tax resident.
Yeah, definitely, yeah.
For all of the reasons that we've spoken about today, I think they'll very quickly learn that that's obviously not the case.
Not the case, yeah, definitely.
One question we get from non-UK residents who own property in the UK is, what is their tax situation if they own that property personally in the UK?
Yeah, so if they own the property in their personal name, so it's not in a limited company, it's just held personally to them, and they're deemed a non-UK resident, so we've already established their residency status, they're non-resident for that tax year, then any rental income that they're getting from that property is subject to UK tax because the property is situated in the UK, so it is taxed within the UK first. If you are entitled to the UK personal allowance, so let's say you were a British national and you've emigrated to the UAE, then you are entitled to the UK personal allowance under this condition that you're a British national.
Yeah.
So the first £12,570 personal allowance is not taxable. So any profits that you get from that rental property up to £12,570 you're not going to be paying tax on that. So it can be beneficial, especially if you're in a tax favourable environment such as the UAE, then you can be earning that money within the UK, and the first 12,500 is going to be tax free, and you don't pay tax on it in the other country either. So that's with the UAE favourable environment that they do have.
Thanks very much. That's been super insightful. For anyone watching this, no doubt we'll have some questions, and we're going to put a link in the description below. For any questions that you have, feel free to get in touch with the team. You can get in touch with Abby, who will be more than happy to answer any questions that you have. So thanks very much for watching.